These may be some of the most underrated funds in the market today. We are talking about IQQQ, which is a ProShares NASDAQ 100 high income ETF. It is beaten down because we've seen the NASDAQ fall over the last month, but this fund has a 10% dividend yield and it follows the price of the NASDAQ really, really well. We're going to talk about everything pros and cons with this fund. I have another video on SPYI, another ProShares fund, and I think both of these may be severely underrated in today's dividend investing market. So if you guys are interested in this type of content, don't forget to like the video and subscribe. And you can check out some of the other videos on the ProShares and as well as the weekly dividend videos we have been putting out more recently. But for now, we're going to go over a few things in this video. We're going to go over the ProShares website for IQQQ. And then we are going to look at the distribution history. We're going to check into that. We're going to see if the yield really is that 10%, which they're saying that it is. We are going to throw this into the drip calculator, which it gave me a really surprising result. And then we are going to check what you would make if you invested $10,000 just off the distributions over 5, 10, 15, 20, even 30 years. So I hope you guys enjoy. Again, like the video if you do, and let's jump straight into it. So we are back on the ProShares website, which I do like this website. I think it's very clean and I like how they do things. And now the investment objective with this, it's very interesting. This is the first NASDAQ 100 ETF powered by a daily call option strategy, but it does not trade options. So the ProShares NASDAQ 100 High Income ETF seeks investment results before fees and expenses that track the performance of the NASDAQ 100 Daily Covered Call Index. So IQQQ gains exposure to the sale of daily call options using swap agreements and does not trade options. So it gets a little bit more technical, but what I like about this fund is that instead of just being a simple call option fund, which they have performed well, and I'm not knocking, call option funds, this is a little bit different. It adds a little bit of diversification. Now we can see the NASDAQ was doing well prior to about a month ago, but this fund started trading in March of 2024. And if you had invested $10,000, it would now be roughly up $250 with the fall off. But at a high, it was up 14%. And now there's something I didn't mention in the SPYI video that I want to mention right now. Both of these funds, this is on every page of their website. It takes a lot to put this on your website. You have to believe in your fund because they are showing you flat out this is how the fund has performed. And this is since inception. So 5, 10, 15 years down the line, if this is still on here, it's going to show every flaw that the fund went through, all the dips and whatnot. So this is a big deal. This is a really big deal in my opinion. I would like to see if like YieldMax did this and kind of countered the NAV erosion, but I doubt we will see that. So I think this is really, really cool. They have a bunch of other stuff on here. We've seen the 1 month, they're down 2%, but even, 6 weeks, 8 weeks ago, it was even worse. Year to date, they're still up about 5.81% on the market price, and the NAV is almost 6%, which is brilliant. There's a lot of good details in here. If you guys want to check out the website, I really do recommend it. The annualized distribution yield, they have it at 10.05%. It pays out monthly, which, I love, chef's kiss. Only thing better than that is weekly. And then we have the expense ratio of 0.55, a lower expense ratio than what we've seen, nearly half of what the YieldMax funds are, which I love. And so they have some interesting stuff in here. Go through, check it out. Let me know what you guys think. I do think it's really important to know what this stuff means. And I don't know what all of it means. I'm by no means an expert. This is not financial advice, but you can learn as I have been learning and will continue to learn. So the exposure in the different sectors, information technology, probably one of the best ones you can be in my opinion, because of the future of tech. Tech is going to continue on probably forever. Communication services important, consumer discretionary, it's just spending. We have healthcare, consumer staples, industrials, materials, and so on and so forth. Very little in energy. I like energy. I like financials, and I like real estate. Those are all low on this one, but that's okay. This is a good option for me to have some diversification. And then they have, Apple, Microsoft, NVIDIA, all of these funds. So it's a really, really beautifully put together website. I love the graph. I love all of this. I think they did a really good job with it. Now we're going to take a look at the distribution history. Before I jump into the dividend history, I want to mention something Coffee Holic for Life mentioned in the comments. We do have a Discord. I have a Discord for the channel. It's relatively small and it's totally free. We go in there, we talk about different stuff, talk about what the market's doing, and it's a good place just to meet different investors and find people that have like-minded strategies with dividend investing. And so if you guys are interested, the link is on my channel page. Go check that out. Again, it's free and it's always going to be free. I hate those paid ones. So just so you know. Now we're going to go down. We see the dividend yield. They have it way lower because the Seeking Alpha can't fully track a dividend until it's paid out for about a year. But the last dividend was 35 cents for last month, which is pretty solid. So we can see they've only paid out 4 dividends because they do pay these out every single month, but they've only been paying since what, May. So we do have a little bit of a spread, nothing too crazy, 36 cents, 29 cents, 35 cents, and roughly 34.5 cents. So not a lot of dividend history with this one, which is one thing that I think I would like to see more dividend history, of course, but we simply cannot see that because this fund has not been around that long. But that means there is a lot of potential for growth, especially if this thing takes off and does well. So I'm definitely pumped. I think this is a solid fund, but let me calculate the dividend yield. I'm going to do that off camera so you guys don't get bored, and let's just check this thing out. They were so close. My calculated yield has it at 10.01%, which is phenomenal. I know this might sound like a small percent to some people because we've seen the YieldMax funds that yield 100% and some of the other ones that are yielding 40, 50%. But guys, this is a really solid dividend yield, and it's also going to follow what the NASDAQ 100 does. So even though this video is going to be calculated off the distributions and what money you could make, it's not even going to include the potential you could make from the price appreciation in this fund in the long run. So that's why I think these funds are phenomenal. I will be buying these soon. I own a lot of dividend stocks. I'm trying to get my portfolio a little more organized, but I do love these ones, and I think they're probably a safer hedge than when we've seen with the YieldMax funds and even some of the Round Hill funds that are yielding 30, 40%. This dividend percentage is a lot more consistent, or I would imagine they can be more consistent, but you never really know. Sometimes these funds just flop. So there is always risk. Not financial advice. I have to say that 1,000 times every video, but still a 10% yield is solid and you get some great price appreciation. Let's check out the drip calculator. Using dividendchannel.com's drip calculator, I like this one a lot. We're going to chart IQQQ versus NDX, which is just the index for NASDAQ 100. And now this is where this gets so interesting to me. The price appreciation on this fund. So we've seen, of course, the returns have been rough. This thing fell off, of course, and the NASDAQ 100 did as well. But the total return so far, you would be better off investing in NDX in comparison to IQQQ by about a 0.5%. And that's with dividends reinvested. With dividends not reinvested, it's roughly the same thing. So this is hard to tell because this has been such a small trading time that I wouldn't really rule this fund out because it didn't perform as well as just the NASDAQ 100. But one thing that is really key with this is the dividends compounding effect. So let's say you're reinvesting in this in 10 years, this would look drastically different. And I guarantee that the dividends reinvested one would be huge compared to the dividends not reinvested. Because what you're able to do is, say you put a good amount of money in this, you put a good amount of money into NDX and it goes up 40%. So you put the same amount of money into IQQQ and the price is relatively consistent with the dividends not reinvested. But with those dividends reinvested, you're buying more. And so if you believe that the NASDAQ 100 will go up in time, which I do, you are buying more and more at a cheaper price. So your compounding effect is happening every single month, whereas just owning the stock, you're not getting the compounding effect. You're getting the growth. But over time, you would do significantly better with the dividends being reinvested. So I'm really happy to see that it trailed so closely with the actual NDX NASDAQ 100. And I was surprised to see that even in the short period of time. So we will see, maybe in a year I'll do a follow-up video on this one, but so far, I am definitely impressed and I'm definitely interested. The first calculation is always pretty simple. You have $10,000 invested at the distribution rate of 10.05% for 1 year. And we know that we're going to get $1,000 in dividends on our $10,000, which is phenomenal. It really starts to kick up once we go to 5 years. But before we do that, don't forget to subscribe, guys, if you're interested in this content. And I do want to say that this is completely an assumption. We do not know what's going to happen. I have no idea what's going to happen. The return rate, which is our distribution yield, could go down. The price could go down. The price could go up. The distribution rate could go up. We don't know at all. This is just based off the current price and what we're looking at. And this is not including the price appreciation or depreciation that we can see in the stock market. Typically the stock market goes up, and I would definitely believe that the NASDAQ 100 would be one that goes up. But again, we never know. So before you come for me in the comments, this is just speculation to see how much money you can make. And again, this is a safer fund. We're not going to be seeing YieldMax numbers. If that's disappointing, I understand. It's fun running those numbers and getting to $1 billion by year 7. But this is a much more realistic outcome. After 5 years, we've now made $1,400, almost $1,500 in dividends this year, which is a 5% increase from our first year. And your total returns are $6,000 in dividends. We'll jump this up to 10 years. And now we are making $2,400 every single year in dividends off of our $10,000 investment. So you are now recouping in every single year 1/4 of your initial investment. And our total return is $16,000. So let's see, what year do we pass? At year 7, you're $500 short of passing your initial investment, which is roughly what we've seen in the market. They say money doubles roughly every 7 years. And again, this is just the distributions. This is not the price action of the fund. So that is really, really important. Year 20, I'm sure we're really going to see it kick up. Now you are making just over $6,000 every single year in the dividends, and you've made $58,000 so far. And it's just going to keep getting better from here. So what we like to do now is I like to say, not 301. Let's say that you're 25 right now and you invest $10,000 into this fund. It trades sideways, but the return rate stays the same. Our distribution yield stays the same. Price action trades sideways. You now make $16,000 every single year from your $10,000 investment. And at year 25, this is where it gets crazy. So in 25 years, it's a long time. It's a very long time. But in 25 years, you are now able to recoup your initial investment every single year. And I know I have some family members that have gotten to this point, and it is amazing where, oh yeah, I invested $500 30 years ago, and now the fund pays me $3,000 a year. So you can make so much money over time, and the longer you leave it, the better you can do. So $10,000, you can invest that over the span of what, a couple years maybe. So if you did that with multiple funds, all of a sudden you have all this passive income. But the kicker here is all your returns. You have $167,000 in returns off of $10,000. It's just phenomenal. And the key thing here, I invest in my Roth IRA primarily. I have other funds too, but I max out my Roth every single year. So I have money that has already been taxed, which means my gains will not be taxed by the government. And that is phenomenal, because if this was in a non-tax exempt brokerage, you'd be paying what, 10 to 15% in taxes. So this way I'm taking all of that money, not giving any of it to the government, because it's already my money. So I hope you guys have enjoyed this video. Again, like and subscribe if you did. I always appreciate you guys. Leave a comment. Let me know what you think about this fund, if it's too low of a yield for you, and if it is, what are you investing in? I'm genuinely super curious. Thank you guys for being here, and I hope to see you in the next one.